Have you ever dreamed of owning a piece of the city skyline, a bustling commercial center, or a portfolio of rental properties, but felt like it was totally out of reach? For most of us, the massive down payments and complexities of traditional real estate investing can feel like a huge barrier. Well, what if I told you there's a way to get in on the action without needing a millionaire's bank account? Today, we're diving deep into the world of real estate crowdfunding. So, what exactly is it? Imagine you and a bunch of other people all chip in a little bit of money to collectively buy a property. That's the basic idea. Real estate crowdfunding platforms are online marketplaces that connect investors like you and me with real estate developers and operators who need funding for their projects. Instead of one person fronting millions, hundreds or even thousands of investors can contribute smaller amounts, making big-time real estate deals accessible to everyone. Think of it like this: a developer wants to build a new apartment complex. They need, say, $10 million. Instead of going to a single bank, they post their project on a crowdfunding platform. You can then browse the project, check out the business plan, the location, the projected returns, and decide if you want to invest. You could put in as little as a few hundred or a few $1,000s, depending on the platform. And just like that, you become a fractional owner of that apartment complex. You're in the real estate game. Now, you might be wondering, what's in it for me? Well, the benefits are pretty compelling. First up is diversification. We all know the saying, don't put all your eggs in one basket. With crowdfunding, you can spread your investment across multiple properties, different types of real estate like residential, commercial, or industrial land, even different geographic locations. This helps to reduce your risk compared to putting all your money into a single physical property. If one investment doesn't perform as expected, the others in your portfolio can help balance it out. The second major perk is the potential for passive income. This is the dream, right? Making money while you sleep. Many real estate crowdfunding deals are structured to provide regular cash flow distributions to investors, often quarterly or annually. This comes from the rental income generated by the properties. You don't have to deal with tenants, toilets, or termites. The professional real estate company manages all of that. You just collect your share of the profits. It's a hands-off approach that's perfect for people who want the financial benefits of real estate without the headaches of being a landlord. And of course, there's the low barrier to entry, which we touched on. Traditionally, you'd need a hefty 20% down payment, which can be tens or even hundreds of thousands of dollars. With crowdfunding, you can get started with a much smaller initial investment. This opens up the world of private real estate, an asset class that was once reserved for only the wealthiest investors. Now, regular people have a seat at the table. Let's talk about the different types of investments you'll find on these platforms. They generally fall into two main categories: equity and debt. With an equity investment, you are buying a direct ownership stake in the property. You become a part owner. Your potential for returns is tied to the property's performance, including rental income and appreciation in value when it's eventually sold. The potential for high returns is greater, but so is the risk, as your return isn't guaranteed. On the other hand, you have debt investments. In this case, you are essentially acting like the bank. You are lending money to the real estate developer, and they agree to pay you back with interest over a set period. Debt investments are typically seen as lower risk because you have a clearer, more predictable return in the form of fixed interest payments. Your principal is also in a more protected position than that of the equity investors if things go south. The trade-off is that your potential upside is capped at the agreed-upon interest rate. You won't share in any extra profits if the property sells for a huge gain. So, how do you get started? The first step is to do your homework and find a reputable platform. There are many out there, each with its own focus, fee structure, and minimum investment requirements. Some platforms are only open to accredited investors, that is, people with a high net worth or income, while others are open to everyone. Read reviews, compare their track records, and understand their due diligence process. How thoroughly do they vet the deals and the developers they feature on their site? This is crucial. A good platform does a lot of the heavy lifting for you by screening projects. Once you've chosen a platform, you'll create an account, which is usually a simple process. Then comes the fun part, browsing the available deals. Take your time here. Don't just jump on the first project that promises a 20% return. Read the investment memorandum, which is a detailed document outlining the entire project. Look at the developer's experience and track record. Analyze the market and the location. Is it a growing area? What are the economic drivers? What is the business plan? Are they planning to renovate and flip, or hold for long-term rental income? Understand the timeline. Real estate is not a get-rich-quick scheme. Most crowdfunding investments are liquid, meaning your money will be tied up for several years, often between 3 to 10 years. Make sure you are comfortable with that timeline and are investing money you won't need to access in the short term. Now, let's address the elephant in the room, the risks. No investment is without risk, and real estate crowdfunding is no exception. The biggest risk is the potential loss of your entire investment. If a project fails, you could lose your money. Market downturns can affect property values and rental income. A developer might mismanage the project or run into unexpected construction costs. This is why diversification and thorough due diligence are so important. By spreading your money across different deals and carefully vetting each one, you can significantly mitigate these risks. Another thing to be aware of are the fees. Platforms have to make money somehow. They typically charge fees, which could be a percentage of the amount you invest, a share of the profits, or an annual asset management fee. Make sure you read the fine print and fully understand all the fees involved, as they will impact your overall return. But despite the risks, the potential rewards and accessibility make real estate crowdfunding an incredibly exciting option for the modern investor. It democratizes an asset class that has created tremendous wealth for generations. It allows you to build a diversified, passive income-generating portfolio that aligns with your financial goals, whether you're saving for retirement, a child's education, or us trying to build wealth over time. To recap, real estate crowdfunding allows you to invest in large-scale properties with a small amount of capital. It offers diversification, passive income potential, and access to professionally managed deals. You can choose between equity or debt investments, depending on your risk tolerance. The key to success is to use reputable platforms, do your own thorough research on every deal, understand the risks and fees, and be prepared for a long-term investment horizon. If you've been looking for a way to break into real estate investing without the massive capital or landlord duties, this could be the perfect solution for you. It's a powerful tool that, when used wisely, can help you build a more robust and diversified investment portfolio. Thank you so much for watching. I hope this has given you a clear and helpful introduction to real estate crowdfunding. If you found this video valuable, please give it a thumbs up, and don't forget to subscribe to the channel for more content on smart investing and personal finance. If you have any questions or have your own experiences with crowdfunding, drop them in the comments below. I'd love to hear from you. Until next time, happy investing.